Hey everybody, this is David Skorica. We're going to be looking at gold today as our stock chart of the day, gold slash the debt. So we can see this gold is over 2,800 for the first time ever. It's breaking out to new all-time highs. There's two reasons I think for this. We're going to first of all, we'll get it before we talk about the debt. I think one of the reasons is there's stockpiling going on. Because remember, if Trump does his 25% tariffs, a lot of gold and silver is imported from Canada, from uh, uh, Mexico. You should gold and silver. Well, that's going to be subject to the tariffs. And if gold is 2,800, 25% is like $700. You want to pay $3,500 for gold when it trades at 2,800? I don't think so. So I think there's still the worries over debt. That's why we still have long-term rates at pretty high levels, despite the fact the Fed or Trump wants the Fed to cut rates. And I think that this is like a real issue going forward. But I think there's worries over inflation. The tariffs could cause inflation. And quite frankly, people who want to get gold want to kind of go ahead of the curve. And this could go two ways. Okay, if the tariffs are lifted at some point, if Mexico and Canada kind of fall in line, maybe there'll be a short-term pullback in gold. But also, if everyone's positioning right now and those tariffs last for a while, then there could be shortages in imports after a while because people might not want to pay. They might just scramble for domestic gold that's produced in Nevada or Alaska or wherever because they don't want to pay for that foreign gold. Now, maybe they'll go to countries that don't have tariffs on it. But when you're talking about Canada's a large gold producer, Mexico's a large gold producer, they're your neighbors. They're the easiest place to import them from. And then all of a sudden, that gold is basically off the market because it's subject to tariffs. You know, so there you go. So this is the U.S. national debt clock. So what I want to talk about is two things with this. Number one, I do think one reason that gold is going higher is still worries over the deficit. So this is Doge right here. Okay. And you can see this is the savings. So you can see the U.S. federal spending is roughly 7.2 billion. There's been, say, estimated 41 billion in savings. 7.2 trillion. So we haven't even saved over a 0.5% of spending. So the deficit here is 2. The actually estimated deficit, that's the official, is probably closer to 2.2. I think Doge is going to do very limited cuts at first because it's very difficult to cut the beast, starve the beast. So let's say it can do a couple hundred billion in savings. I think the issue is Trump is going to try to do a tax cut that's 800 billion to $1 trillion a year. So if you cut from 2.2 to 2, then you're right back at 2.7, 2.8, right? And then I think that's one reason we're seeing gold go higher because I think there's worries over the debt. I think that's why we've seen interest rates going up, even with Trump really banging the table for the Fed to cut. I think that's the thing going forward here. So, and then I want to talk about something else. Trump's been saying all this stuff. One reason I think he's trying to promote his income tax cut is he's saying that we should have no income tax and just go back to duties like in the 1880s, right? I look back at it. There was no official numbers for back then, but from 1880 to 1910, the average interest rate was 2.5%. Or sorry, the average government spending as percentage of GDP was 2.5%. So the government made up, 2.5%. Well, now with us spending 7 trillion at the federal level and domestic product being about 29 trillion, we're close to we're close to like 25% of GDP. So the government is 10 times the size as, a percentage of the economy. And then if you take into account the growth of the population, the growth in real GDP, because people are richer now than they were in the 1880s, you could say the government's probably 100 times in size per person than it was back then. There was no Social Security back then. There was no Medicaid, Medicare. Look at all these things. You can see them here. Medicaid and Medicare are uh, they're a huge part of Social Security, Medicaid, Medicare. You're talking uh, 3.2 trillion. Then the defense, you're talking 4 trillion on spending is these things alone, right? None of that stuff even really existed. There was a small defense force back in the 1880s, but not like it was now, especially after the Civil War. It was just the basic, army to protect the nation. And the U.S. didn't really get involved in foreign conflicts until World War One. So the government was way smaller. So that's why you could have duties and excess taxes. Like the excess tax you can see is only 104 billion, and tariffs are 73 billion. So they're like say let's say roughly 180 billion, right? You're talking the US that was all the taxes that funded the government. Now it's 3 to 4% of federal tax revenue. You can see payroll taxes and income taxes are about 4.3 trillion dollars. When you have and then if you include corporate taxes, you're 4.8 trillion. Like when you have a welfare state where you have to support all these things, right? All these programs and the big government, you need an income tax. Now, I think you could replace it with a national sales tax because you have a consumer-based economy. And Senator Lugar, back in when he was a senator and he ran for president, he was a senator of Indiana. He talked about that, right? He talked about percentage of GDP, percentage of spending. If you had like about a 20% national sales tax, that could do it. But the US only imports $4 trillion worth of goods. So just to replace the income tax, you would need an average tariff of 65%. Well, I live in the Bahamas. Like our maximum tariff here is like 65%. That's only in a few goods. The average tariff here is like 20%, and that's one of the highest in the world, by the way. Like the average tariff in the US, we can see we'll do it 73, just do the math, 73 billion in tariffs on 4 trillion on imports, right? You're talking 2%, right? So it's like you would have to basically, things then would basically the average tariff would have to go up by 30 times. And then just think how that expensive that would make things. Like I'll give you an example. In Canada, cheese is really expensive because they have this big dairy lobby. So if you buy like the real brie from France or mozzarella from Italy or cheddar from UK, it's way more expensive in Canada. And then you kind of buy the imitation local Canadian ones, which quite frankly, outside I'd say the cheddar isn't as good, right? Like to me, the Presidente brie or like the real authentic mozzarella from Italy is way better. But the dairy farmers there know they can charge more and make more money, or the cheese companies, because everything's so expensive on the import. So yeah, if you had 65% duty on cheese or like meats or whatever from overseas, like the local producers would be like, well, we can up our prices by 30 or 40% because guess what? We'll still be cheaper than them and we'll make more money, right? So that's kind of the way it would go. You'd be importing inflation. Remember, the US uses a lot of raw materials, aluminum, gold, silver, oil from Canada or Mexico or wherever, and then they refine that stuff and manufacture it in the United States. So again, that would all cost more to manufacture, et cetera, right? And then because of NAFTA, the way the auto industry works is some cars are assembled in Canada, and some parts are assembled in Canada or Mexico, and then some like the same car is like dually assembled in like all three countries. So it just wouldn't work. And like I said, the US is not a trading nation. $4 trillion is only like 1/7 you can see of GDP. It's like 14% of GDP. And the total trade in the US is about 7 trillion, so about 25% of GDP. Canada and Europe, all these places, their trade is like 65% of GDP. The US trades less than half as a percentage of GDP than most Western countries. And then another point, and this is my father made this point, that is if you're importing the same amount of money, comes a catch-22 situation, is it means the tariffs aren't working because that means you still are importing that stuff and you're still making the same amount of money off it. Now, you can ask, well, how could they fund the government with tariffs back then? Well, back then the issue was the deficit. The government was so small, you didn't need much money to fund it. So even if imports went down a bit, you could still fund it with tariffs. But now the government is huge, and it's kind of like you'd be in this catch-22 where like you want to do tariffs to help your own domestic industry to export and also produce more of your own goods. But if the amount of imports went down, if that's your number one source of income, it doesn't work. See, I live in the Bahamas, and tariffs work in the Bahamas because we're an island country. It's a small population, so you can fund the country on tariffs and a sales tax. That's what they have here. And it's also it's an island, so you have to import goods. And it's so small, the Bahamas isn't going to produce its own cars. The Bahamas isn't going to produce its own large scale, own refrigerators. These things all need to be imported, and they all can have tariffs on them when they come into the island, right? So that's why it works here, because we have to import this stuff. The US doesn't have to import a lot of things, and especially finished goods, and it just wouldn't work. And like I said, with the government being so much larger than it was in 1880, 1890, you need these taxes to feed the beast, you know? So, look at this. Again, 4.3 billion. Well, do the math, right? Just for income tax and payroll tax, that essentially funds Medicare, Social Security, and defense spending, right? Payroll tax is used for Social Security, right? Well, it's Social Security. We all know it's a pay-as-you-go system. You got 1.7 billion coming in right now, and you got 1.5 billion going, or 1.7 trillion, by the way, and 1.5 trillion going out. So that basically still funds it, right? Which actually tells you another problem is because this is really just used for Social Security. So these are the other taxes that have to fund the rest of the government. So anyhow, I'm just trying to say that's the problem. It's an antiquated way of thinking. I don't think it would ever work, etc. Right? So I just wanted to point that out for everybody. And I think unless you have real drastic spending cuts, and you'd have to almost reform a lot of these entitlements as well, somehow make them cheaper. That's the only way this is going to work. And I think the market is worried about that. And that's why, we'll just quickly go on stock chart so we can see the price of gold right now. That's why I think gold, it's not just, you can see this was a clear breakout yesterday. That's why gold is not just going up because of, this import, short-term import, because fear over tariffs. I think this issues of fear over debt, still too much spending. Are the tax cuts, are the spending cuts going to be big enough to offset shoot the tax cuts? You're not going to replace that revenue with tariffs. And I think that's it. So sorry for the lack of updates. I've been still working on the damn book. I have to reform my my email thing, and we're going to start working on the new website here in February. So please bear with me. Members updates are still coming. Yeah, I hope everyone have a great weekend. And I'm gonna have some really interesting. We're gonna talk about Nvidia a bit next week. Because the smash it had this week is at the start of the finally maybe the bursting of the bubble. We'll talk about junior stocks, which look like they might finally be on the verge of breaking out. So I hope you enjoyed this, and everybody take care.